How's it going, everyone? It's Sam. Today I'm looking at something that's even better than penny stocks and is a lot less risky. We're going to go through it and talk about the pros and cons of it. And I know that I'm going to get lots of hate because a lot of people that trade penny stocks watch these videos, obviously, because there's penny stocks in the name. And they might not like what I have to say. So everyone that is here, please stay on board throughout the rest of the video so that way if you do agree with me, you can hit the thumbs up so that I don't get as much hate from all those penny stock lovers and all the traders and everything like that. I just know that I'll get some flack for it, which is fine. Everyone's entitled to their opinions, but we're going to go through it here and just kind of talk about my issue with penny stocks and as a YouTuber or someone that makes YouTube content, the issue that I run into. So right here, we can see one of my first, and really my first penny stock video. So 5 penny stocks to buy. It's really in the title, I think it said 5 penny stocks to watch this week. So I talked about Hertz, which was a company that went bankrupt, and I was telling people not to go and buy it. I talk about Planet 13, which is a company that I own. Another company here, Genus, which I was cautious of, and I told people that I think it's overvalued, which it's gone down maybe 50% or so since I talked about it. I talked about Plug Power, which actually has gone up about 100%. I talked about NAT, which has been about the same. I think it might have gone down 1 or 2, maybe 3% since I talked about in this video, but that's a penny stock that's more of a long-term play, so not something that I plan to sell right away. It's not like a big day trading stock, but as you can see here, this is one of my best videos. So on YouTube, I have 8,000 views on this. My revenue, so the amount that I get paid per 1,000 views is really high. I mean, some days, I didn't get a ton of views these days by any means, but I get 60% of this, so I was getting maybe $50 per 1,000 views. I probably got like 10 views or something like that, but overall about $33 CPM, so I was getting maybe $20 per 1,000 views, which is really high. If you saw my last video here, I'll link it up about how much I made in my first month. This is more than I get paid for just about any video, but YouTube really pushes these penny stock videos, and I made more in this video than I made on any other video by far. I think it doubled every other video that I've had. And you see other YouTubers like Zip Trader who have tons of views. He has 227,000 subscribers. All he does really is talk about penny stocks and trading stocks, and a lot of his videos rely on these penny stocks and different stocks to trade. A lot of it's technical analysis, not really based on value investing like I do and I look into, and there's nothing wrong with that. I think a lot of people are interested in penny stocks for a variety of reasons, and we'll go over them here. We're going to look at some of the pros of why people trade penny stocks. So a lot of the reason that people trade penny stocks is the low stock price. They're easy to buy. So they are typically $5 and less. They were called penny stocks at first because they were pennies, so up to $1, but now it's considered really $5 and down. They're thought to be less risky just because they're only a few dollars, so how much can they really go down? There's more upside potential with these stocks, people think, because they are down and they're very volatile, so they can go up a lot really quickly. You can also earn an extra stream of income if you trade it. So a lot of people like to trade these, like Zip Trader. A lot of these people talk about being able to take profit, doing this and making $100 a day at it, and using like maybe a $3,000 or $4,000 portfolio, get 2% a day, and then make us an extra stream of income. So that's what a lot of people think about. And I disagree with pretty much every one of those. And I'm going to talk about why I disagree with them, and then talk about an alternative that is very similar to penny stocks, but I think it's a much better solution, less risky, a lot better over time than these penny stocks. So let's go through each one of these. The low stock price, easy to buy. There's a low stock price. People think that it's easy to buy because it's $5, so you can just throw $5 in the investment, and it's really low risk. It's really easy to get into as a new trader. I think that a lot of people just are drawn to it because it's $5 and less. So if you don't know, you can buy something called fractional shares. So with certain platforms, you can buy, let's say, 1/1000th of a share of Tesla. So for example, if you want to buy 1/1000th of a share of Tesla, you could put in $1.50 because I think they're right around $1,500 today. Now, I do want to say again before I go forward, I usually hit on this earlier, but this isn't financial advice. This is not meant to be me telling you what to buy and what not to buy. I'm not a financial advisor, so make sure you do your own research, but I just wanted to get that out now. You can go in, let's say, to Robinhood, which I have a link to in the description below, or M1 Finance, which I have a link to in the description below, and you can go in there and buy a very small amount. So you have to, with Robinhood, you can start the account with any amount. With M1 Finance, you have to deposit, I believe, $100 to start it, but you can buy one little part of a company. So you don't need a full share, and you can buy a really good company for very small amount of money. So you can do that. So right away, easy to buy, low stock price, doesn't really matter because you can buy fractional shares with these other companies. They're thought of as being less risky because you are putting, let's say, $5 or $10 in it. Well, that's not really the case because these companies are very small, so usually $1 billion or less a lot of the time. Some of them are 100 million, some of them are 200 million. These are pretty small companies, and I understand that 100 million sounds like a lot, but they are very risky because a lot of the time these penny stocks, I mean, what companies that are, let's say, $50 million, worth $50 million are traded publicly? Companies that want to raise money so that way they can increase their income. So a lot of the time, these companies aren't profitable, or maybe they're slightly profitable, but they're really spending a lot of money. They're trying to raise money so that they can try to put something new on the market. So a lot of them, the ones that I see a lot are like biopharmaceutical companies. I don't know about you, but I don't understand biopharmaceuticals. So I hear this company that's trying to make like some kind of treatment to some disease, that the disease is really complex, the treatment's really complex. I studied organic chemistry for years at college. I studied chemistry, biology. I studied a ton of different classes that are in that space. I was a pre-med student and did really well, and I don't understand these biopharmaceutical companies. So I find it hard to believe that a lot of people understand what's going on. I don't understand what it takes to get a drug really pushed out to a large public and really make a lot of money for the company. So that is a really risky play to me. I mean, I don't want to base my investment on some hype about some drug trial that I don't understand. So this is money that is near and dear to me. I worked for it. I don't want to just go throw it in something that I've never heard of just because someone says that it's a good option. Now, a lot of people think there's more upside potential. So they think, okay, with some penny stock, I could put in $10 and then it could grow to $10,000. That's pretty unlikely. So a lot of the time you don't hear about these penny stocks until they've gone up 100 or 200%. So let's talk about something like Genus. So Genus is a stock that I've talked about a lot here. A while ago, they did really well. So they got in the news about here or so because they had this new deal. They were going to stream their content. They're a kids entertainment company. They were going to stream their content. They were going to make a ton of money. Well, they're not really profitable right now. They barely made any money. They're pushing their content out to a lot of people. So they're going to be on some different streaming stations. Their stock went up hundreds of percent to about $8 or $9 a share. And at this point, it would have been great if you knew to sell out then. But why wouldn't you have sold out when it went to $4, let's say? Because, I mean, you doubled your money right here. How would you know to trade exactly at $7? That's going to be really hard to do. I mean, a lot of the time, these penny stocks, these small stocks can go up 20% and down 20% a day. There was some big news over here, and I've made videos on it on this day where they talked about how they had big news that they were going to announce and that there's a really exciting business development opportunity. So the stock went up 50%. So you might be thinking, oh, sweet, I'm going to buy in. Maybe you bought in halfway through here, so it went from $2.30 to $3.55. Maybe you got in early and you bought at $2.75 or something, and you thought, okay, I have this really great opportunity. The stock went up another 20% after you bought in or something like that, and you thought, okay, I'm going to hold for this great news on Monday or on Thursday or whatever day it was, because they're going to make a ton of money in the future. And then the news comes out, it wasn't as great as people thought. It went down 25%, then it went down another 10%, and now it's gone down even since then. So you never know with these penny stocks. There is a lot of risk with them. A lot of people think you can make an extra stream of income if you can trade it. Well, that could be true if you can figure out a way and you are really good with technical analysis. You can read stock charts and you can figure out exactly when to buy and sell, which I will say, if you don't have WeBull, I'm just going to talk about it right now because I have a link in the description. They have candlestick charts, so if you are a technical trader and you base it off of technical analysis, you should use that app. You can set up really nice watch lists, and it's really easy to track in there compared to like Robinhood or M1 Finance where you can't see stock charts like that. I really like it, but I don't even use technical analysis. I like it even just because of some of the news and the fact that like a news section of it and the fact that I can set up those watch lists. But you can use that and get 2 free stocks, one up to $1,400 if you use the description below if you deposit $100 or more. Going back to here, if you can create an extra stream of income through this, that's great. Like if you can do that, that's awesome. Now, I will say, if you can do that, why not base it on some of these larger companies? So some companies still trade very aggressively and they're very volatile. So something like Tesla. Tesla is a company that has a great long-term outlook. They are going to do really well over the next 10, 20 years, I believe, and they're still very volatile. So if you can read stock charts, I would suggest you could do this with Tesla. So even if you're wrong over time, let's say you buy in and it goes down today, well, you can still wait a little while for it to go back up because most likely it's going to do well over time. It's probably going to go up to, my guess is 3,000 in the next few years, even 2 to 5 years from now. It was up 6% from the beginning of the day, but it was actually up like 10% pre-market. So it was up 12 to 16% today, and then it dropped back down. So it dropped back down another significant amount. I think it went down about 17% or so, and then it came back up a little bit. If you can create this extra stream of income, why not just do it with Tesla or something? It's easier, I think, to kind of tell where Tesla is going because there's better news on it. The quality of the company is there. Like, there probably isn't going to be fraud on this company, but something like an $80 million company, there's more room for error. Like, weird things can happen, and it's a lot easier to understand something like Tesla. So they make electric cars. They're trying to make the best technology. They're going to try to sell those cars for a profit. And that's pretty much all you need to know. Like, you don't need to figure out your organic chemistry and figure out how these pharmaceuticals are going to go. You can just understand the business right away. So that is what I'm going to say there. That's something that I've done. So if you look here, I have 1/10 of a share of Tesla in this portfolio. Now, you might be thinking, okay, well, what does 1/10 of a share do? Well, that's $150. My cost basis is pretty low on this. So I bought this a while ago. I think I bought in right around $800 or $900, but it's done really well. Like, I've doubled my money. And that leads me to my next point, where over the long term, I don't think you really want to trade stocks. Like, this is where I'm going to get a lot of flack and a lot of heat from this community, most likely, the penny stock investors, just because I don't think over the long term that makes a lot of sense. I understand that you can make extra money doing this. Like, some people are really good at this and can make a business out of it, but they are very few. So I don't think I know anyone in real life that has made a significant amount of money off of trading stocks. Like, most of the people I know that have $1 million, it's from some investment account that they've had for 30 years. And I hate to say it because I would love to be able to make $5,000 like every couple of weeks or every couple months just trading stocks, or make a couple percent a day just consistently doing that. But I think our psychology is what impedes us. So when we are up big on a stock, a lot of the time we want to sell it to make profits, or we want to keep it because we think it's going to go up more. And it's based not on the fundamentals, it's based on the fact that our fear or our greed come into effect compared to just basing it off fundamentals. And the same thing is true when the stock goes down. Some people buy in a lot more when the stock goes down because they want to buy at a lower price. Some people get rid of the stock because it has been pumped and dumped and they think that's done. And a lot of the time, our brains take over. So our fear takes over, our greed takes over, and we don't do well in those high pressure situations when money's on the line. Compared to if you believe in a company and you just want to invest in it, you can make a good amount of money over time. I realize that's not as flashy, but if you were someone that just had a long-term outlook on Tesla, so you realize that it's a good company, you want to invest in it, and I realize it's easy to say with Tesla because it's up huge, but you could have bought, it's not even a penny stock, it's $215. It's been up just this year 600%. So you could have gone up 600%. You put in $1,000, now it's $6,000 a year later. Let's say you had bought 5 years ago and you had bought in at 151, it's up 900%. You were smart enough to buy in 2012, you could be up 400%. Like if you're going to buy into these stocks because you think they're massive upside, buy into a company that really has a business behind them. And Tesla's not always been that way, where it was a really solid play, but some of these stocks have been really good stocks for a while. Let's look at Amazon stock. So years ago, people thought Amazon was highly overvalued. So over the last 5 years, the stock was at $480 5 years ago. I'm sure when it went up to $1,000 in 2 years, it doubled in 2 years. I'm sure lots of people thought it was overvalued. Well, since then, it's gone up 200%. So if you had put $1,000 in, now you have $3,000. So it's amazing to see that. Like, you don't have to go into a penny stock. If you consistently invest in this over time, or another company, or even the index fund, if you do this over time, you'll make really good money. And I think you can make extra money on the side doing something besides stock market investing. Like, I realize that this is really attractive because you can make really good returns. You can also lose a lot of money, and it takes a lot of time. Like, I try to research penny stocks, and I'm sure I'm much worse at it than you guys who are watching this because you probably trade penny stocks. But I have a really hard time trying to weed through different penny stocks. Like, I don't know the names of any of them before I read them. I still don't really understand the stocks or what really moves them. So I can understand something like Pepsi, like an index fund. I can understand something like Tesla or Amazon. I get it. But over time, I think that these are the companies I want to invest in because I feel good about them. I know that they're going to go up over time. I know the business model. I know what they're trying to do. And I think that it's a better alternative to even do fractional shares in these companies and build it over time than to buy penny stocks. And I'm sorry, because I really wish I could find penny stocks that I like. And I'm sure that I'll make videos on penny stocks in the future. I might even make another 5 penny stocks to buy in the future when I feel comfortable and confident about my picks. And I really feel good about it because honestly, it makes sense. I get a ton of views, I make a lot of money, I get a lot of subscribers. It's fun to do. Like, if you feel good about these stocks, it's awesome to be like, okay, this is a $1 stock. I think it's going to go to $3 and I have 500 shares. That's awesome. I love that. But it's just hard to feel good about it as an investor, as a YouTuber, unless I really feel strongly about the stocks. And right now, I feel really strongly about Tesla, about Facebook, about index funds. Those are easy to talk about, but they don't get as much love. They don't have as many people that want to watch them. So if you like this, please leave a thumbs up. It's going to help me get through all the thumbs down on this. It's going to help me just in the future. If you haven't already signed up for WeBull or M1 Finance or Robinhood, I would really appreciate it. It really does help me out massively. Like, that is a huge part of what I make on YouTube and a huge just boost to my excitement when I see one person sign up for WeBull. I'm telling people oh sweet, I got another person that signed up or something. I wouldn't talk about anything that I don't believe in, so I think that they are really good apps. I just want to talk to you guys about what I really am excited about. So I appreciate you guys watching this. I know it's a little bit longer video. I just had a lot to talk about on this subject, so I appreciate it. Thank you so much for watching, and I will see you in the next video. Bye.